Consider a world from a bygone era. It's 2012, and with the release of the Model S, Tesla completely changed the game. Let's go back in time to the present. But what if you could go back in time and buy $1,000 worth of Tesla shares at that critical juncture? Or what if you had gone ahead and done it at the beginning of the year? After analyzing the data, we came up with some rather astounding findings. Prepare to be amazed by the fantastic roller coaster journey that is Tesla's story as we show you how much you could invest for just $1,000 to go from the days of the Model S to the exhilarating heights of today. Remember to hit the like button, subscribe to Tesla Stock News, and interact with us in the comments section below. Before we embark on this financial journey, let's start this video now. Since its founding on July 1st, 2003, Tesla has experienced an incredible journey that has revolutionized the automobile sector and altered our understanding of environmentally friendly transportation. The Roadster, the company's first idea, was a revolutionary shift from conventional internal combustion engine vehicles. This stealth, high-performing EV, which debuted in 2008, laid the groundwork for Tesla's explosive ascent. Over the next few years, Tesla continued to push the boundaries of innovation, ushering in a new era of opportunity and demand for the electric vehicle market. In 2012, the Model S changed the face of automotive perfection by becoming the epitome of performance, luxury, and sustainability. This all-electric vehicle dispelled the myths that had long surrounded EVs. In addition to breaking down boundaries, it was more than just a vehicle, it made a statement. The Model S redefined the fundamental concept of environmentally friendly transportation by establishing itself as a symbol of status and environmental concern. Its stunning range, innovative technology, and sleek form won over many who were longing for a more thrilling and environmentally friendly driving experience. 3 years later, Tesla's lineup gained even more appeal with the release of the Model X, which featured cutting-edge technology and eye-catching falcon wing doors. It demonstrated that EVs could be simultaneously useful, adaptable, and fashionable. The Model X came to represent Tesla's propensity for pushing the limits of engineering and design. The introduction of the Model 3 in 2017 was a turning point in Tesla's history. With a lower cost, it made electric driving more accessible to a larger group of people. Due to the Model 3's remarkable range, safety features, and sophisticated autopilot capabilities, EVs became widely accepted in a manner never seen before. Tesla has accomplished incredible things in the first 20 years of its existence and currently holds the esteemed position of being the most valuable automaker in the world. Its extraordinary dominance, holding a commanding 59% share of the highly competitive U.S. electric car market, is a clear indication of Tesla's extraordinary ability to captivate customers with its innovative products and steadfast commitment to environmentally friendly transportation. It emphasizes not only market presence, but also a strong bond with people who support the company's mission to transform transportation while minimizing its environmental impact. The story of Tesla is evidence of the enduring appeal of sustainability and innovation. The mysterious CEO of Tesla, Elon Musk, has been a key player in this process. His creative spirit, unwavering determination, and bold vision have elevated him to a well-known position on the international scene. Whether it's his foray into space exploration through SpaceX or his grand ambitions for renewable energy with SolarCity, Musk's pursuits go beyond the confines of conventional business. Tesla still has a long way to go before realizing its full potential. Despite its impressive past performance, potential and promise abound in the future, and Tesla is well-positioned to take advantage of these developments. For Tesla, the introduction of the Cybertruck is one of the most anticipated events of the year. This all-electric pickup truck's unique appearance and high-performance claims have generated a lot of talk. The Cybertruck, which is expected to be delivered by the end of the year, is Tesla's entry into the huge U.S. full-size truck industry. With its unique qualities and the devoted fan base it has built, Tesla has the ability to disrupt this traditionally conservative industry. Tesla's global development is gaining traction beyond the U.S. market. The growing narrative of China, the largest automotive market in the world, is especially interesting. Recent market data shows how Tesla's presence has been increasing rapidly in China. In July, Tesla's market share in China was 7.5%. By August, it had risen to a staggering 13.2%. This impressive increase highlights the brand's attractiveness to Chinese customers and its capacity to compete successfully in a fiercely competitive market. Tesla is doing more in China than just selling cars. The company's Gigafactory Shanghai building has resulted in notable advancements in local production. By taking this calculated risk, Tesla is able to lower production costs and position itself to benefit from China's expanding EV market. Furthermore, Tesla is dedicated to providing sustainable energy solutions outside of automobiles. The company's energy solutions, which include residential batteries for the Powerwall and solar panels, have the potential to completely change how we produce and use electricity. These developments support Tesla's larger goal of hastening the global switch to renewable energy sources. Despite ongoing issues with profitability, Tesla's shareholders remain resolute in their commitment to the company. Tesla is a trailblazing disruptor of the automotive sector that has richly rewarded its stakeholders during the unfolding chapters of 2023. Despite the fact that its shares are currently trading at a 40% discount to their record high established in the latter part of 2021, if someone had been smart enough to invest $1,000 in Tesla stock at the beginning of the year, their holding would now be valued at about $2,000. This explosive ascent represents an astounding nearly twofold increase in value in a surprisingly short 9 months. Investors from various backgrounds would surely take notice of and be impressed by this performance. To put this incredible achievement in perspective, all one has to do is take a cursory look at the tech-heavy NASDAQ 100 index, which, although incredibly durable, has only increased by a rather meager 34%. Investors' unwavering enthusiasm highlights the fact that optimism is once again on the rise, particularly when it comes to Tesla. However, it is imperative to recognize that Tesla is currently facing a number of complex issues that require examination in the context of its whole story. Given the current climate of rising interest rates, ongoing inflation, and general economic uncertainty, Tesla's announcement that its revenue increased by a staggering 35% in the first half of 2023 compared to the same period the year before is unquestionably encouraging. Though praiseworthy, this remarkable growth rate is noticeably less than the explosive growth experienced during the 2 previous full fiscal years. The dominant storyline for 2023 has focused on Tesla's calculated price cuts, which were implemented to spark demand from customers at a time when rising borrowing costs are undermining affordability. The renowned CEO of Tesla, Elon Musk, is committed to making sure that his creation maintains an unchallenged lead in the very competitive electric car market. However, detractors typically see these actions as essentially defensive ones, a reflection of the fiercer competition that exists in the EV industry. It is necessary to recognize that Tesla deserves acknowledgement for achieving financial success in a sector that has historically been typified by businesses that find it difficult to turn a profit. Tesla reported outstanding automotive gross margins in 2021 and 2020-29.3% and 28.5%, respectively, with an operating profit of 16.8% in 2022. However, throughout the first 2 quarters of 2023, these pricing adjustments have significantly lowered profitability. To put things in perspective, it's important to remember that over the last 5 years, the operating margins of traditional automakers like Ford and GM have averaged less than 7%, which highlights Tesla's significant competitive advantage. Wall Street analysts have provided estimates that suggest a notable slowdown in Tesla's growth. Revenue is predicted to increase by a relatively small 16% year over year in the current quarter, then increase by 10% in the fourth quarter before experiencing a more robust rebound in the following year. This raises a legitimate question about whether shareholders should be a little cautious. CFO Zachary Kirkhorn emphasized the significance of taking into account the larger macroeconomic climate during the second quarter 2023 earnings call. This environment has the ability to have a positive or negative impact on Tesla's near-term execution. It's important to recognize the significant uncertainty that exists in this outside environment. Even with the general trends of declining profitability and a rather gloomy forecast for the rest of the year, investors seem to be believing in Tesla's lofty goals. The ultimate goal is to build a global fleet of self-sufficient robotaxis that will enable the company to generate extraordinarily large profit margins. This bold goal drives Tesla's relentless attempts to enhance its Dojo supercomputer, which is driven